Welcome back. You're tuned into Bazaar Morning Call. It's Friday the 13th, but maybe it may not be such a bad day. So let's see how the day plays out. But to help us out with some fundamental analysis, Siddhartha Khemka, Head Retail Research, Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning, and thanks a lot for joining in. Everyone's a little bit fearful this morning. Friday the 13th, the Dow on the 6-session losing streak, dollar index at around 107. I don't know whether or not, the bulls can pull out the rabbit from somewhere and, in fact, pull back in today's trading session. So let's see how that goes. Let's talk about stocks, though, Sid. HAL, they won a big order of around 13,000 crores or thereabouts. Street will be quite excited about this. What's your view?
Good morning, Nigel. Yes, everyone fears Friday the 13th. And we have in the last month of the year. But we definitely started on a good note. Congratulations to everybody in India on becoming the world champions, and especially to Gukesh. I think commendable journey there. Youngest ever global, you can say, world chess champion. So a positive note to start the day with. In terms of HL, yes, I think what we are seeing is that the government activity has definitely increased in terms of ordering, not only in the defense space, but also some of the railways, road projects, other projects. So that is a very positive step that the markets would be taking positively. In terms of HL, I think it's a very positive development. The company will supply 12 Su-30 MKI aircrafts along with the associated equipments to the Indian Air Force, deal worth more than 13,500 crores. So in terms of the order book, in terms of delivery, I think there is no doubt in terms of the capabilities that HAL has. Now with the cool off in the stock price is done, I think from here, HAL along with some of the other defense companies like BEL, Mazagon Dock should do well going forward.
I think UBS has come out with a note on HAL, and they say the order value is 13,500 crore rupees, that we know. The indigenization portion is 62.6%, and now year to date, HAL has received manufacturing orders worth 40,000 crore rupees. So the order pipeline is only swelling for Hindustan Aeronautics. In this month, the stock is up close to about 10%. Siddharth, hi, morning. The IPO action has been red hot this week. We've got Vishal Mega Mart, IKS. Today you've got IGI, the International Gemological Institute, the one which certifies diamonds, studded jewelry, and diamonds both natural and lab grown. That opens up for subscription. Any of these IPOs where you're anchor investors or you're recommending to retail investors?
If you look at Vishal Mega Mart, we had a subscribe rating to the IPO. It looked like a one-stop destination for the value garment segment, the lower middle income group. The company has been doing a very strong expansion, especially focused towards the tier 2, tier 3 towns. Very strong financials. So last few years, revenue growth of 26%, net profit growth of more than 50%. So I think it's a good business, both from a listing gains as well as from a long-term perspective. I think that's something that we have been liking a lot. The other one that we are looking at is the international gemology business, that institute, which we believe again one can look at from a long-term investment perspective. The company is a market leader in the industry. It is an acquisition of the IGI Belgium as well as Netherlands, which will make it the world's second largest independent certification and accreditation service provider for diamonds. We know India is a large market for jewelries, and the contribution from studded as well as the diamond business is only increasing. And with more awareness, the requirement for certification would go up. Financials also pretty steady. Revenue grew at about 32% in the last 2-3 years. EBITDA margins, very strong margins of 70%. Return ratios pretty strong. Hence, we believe these two IPOs from the current market, Vishal Mega Mart as well as International Gemological Institute, can be subscribed from an investment perspective.
Just one clarification, Siddharth. The India margins of IGI are 70%, 72%, as you correctly said. But once it consolidates Netherlands and Belgium, which are more high-cost, facilities, the blended margins will drop down to 59%. And when we asked the management about that, the drop in margins once you consolidate these international hubs, they said, well, you need those for your sales. So the blended margins going ahead should be closer to 59%, but that's very, very strong.
Got it. All right. Sid, just one quick word. IDBI Bank, the stock is corrected, I think, from around 110 to around closer to around 80. Now, it seems there is some optimism that maybe, in fact, that divestment could get pushed through. Any view on the stock since it's corrected from the recent peak?
Nigel, I think the story there, the key trigger would be the divestment and who's the new bidder who can come and take up the business. And that clearly remains the key trigger. Even earlier when the news flows regarding the stake sale were up, the stock was up. So I think at this level, yes, one could definitely look at, not from a business perspective, but purely to play out this event of the divestment and a new owner coming in and trying to improve the business going forward. Apart from that, I don't see any triggers from the core business perspective.
Okay, so in the near term, risk reward could look favorable, though that the big trigger will be continue to be divestment. Sid, stay with us for a bit.
Welcome back. Just awaiting the pre-opening rate should kick in anytime now. The Asian market picture is weak. The GIFT Nifty was down 100 points, but it looks like the opening on the Nifty pre-open is more on the flatter side, slipping a bit now, 35 points lower on the GIFT Nifty. IT has been very, very resilient. The Nifty IT index has clocked in a gain of more than 5% so far this month, and some of the IT names are again higher. TCS, at least in pre-opening, is the top gainer. Reliance Industries too has a positive tick. Siddhartha Khemka is still with us. Siddharth, any year-end ideas? Any top picks for 2025? You're in mute.
Yeah, sorry. So we did come out with some of these interesting ideas towards the end of the year, and we'll be definitely coming out with a list of top picks for 2025. But to just give out few names, the jewelry retail segment is something that we have been very positive on. We have been bullish on Titan for a very long time. We have been positive on Kalyan Jewelers for last couple of quarters. We have recently initiated coverage on PN Gadgil, which is the second largest jewelry retailer in Maharashtra with 48 stores across 21 cities. We expect that the company is likely to expand not only in Maharashtra but also in the neighboring states of MP, Bihar, and would be a key beneficiary of the ongoing shift in the jewelry retail business from the unorganized to organized and largely towards the nationalized player. Also, the company has seen sharp increase in its contribution from studded jewelries from to almost 7%, which it intends to almost double by next year to 15%, which should add to the overall margins. In terms of financials, we are projecting a 23% revenue and about 36% PAT growth through the store expansion, improvement in the unit economics, product mix changes, as well as efficient sourcing strategies. Valuation wise, very comfortable compared to some of the other peers like Titan or Kalyan. Hence, we believe that could be a good stock to be with in 2025. And we have a target price of 950 over there.
Okay, all right. I just think in the near term, Siddharth, today I think there are a few, 30 lakh shares that were locked in, which can be sold, so that could be a bit of overhang just in the near term. So we'll keep an eye on that. By the way, Siddharth earlier told us that, IDBI Bank, it had corrected from around 110 to around, that 80 rupees odd mark. And maybe in the near term, that divestment news could keep the stock a little bit excited. So I guess the volumes are rather high in pre-open as well. So keep an eye out on that one, IDBI Bank. Sapna had got some news information yesterday. Siddharth, I wanted to ask you about the OMC space. The last quarter was weak. Quarter 3, though, should be blockbuster. Looking at the marketing margins and all, it's much better than what we have seen in the last few years on an average. So Street could be bracing for a very strong set of numbers in quarter three. There are risks that come with it, but what's your view?
Yeah, Nigel, I think definitely if you look at Q3, refining margins, especially Singapore refining GRMs have improved to about $5.2 per barrel compared to about $3.6 per barrel in Q2. You look at the HSD marketing margins that have remained robust. They have improved in Q3 to about 13.6 rupees and 10.7 rupees respectively, while what we were expecting is about a 3.5 rupees per liter for the next few years. So definitely based on what we are seeing the current trends, we expect OMC's EBITDA could see a sharp rise of almost 60 to 80% on a sequential basis. Q2 versus so Q3 versus Q2, we could see a 60 to 80% rise in EBITDA for the oil marketing companies, plus lower inventory loss sequentially, both in refining as well as marketing, could see a bumper quarter for oil marketing companies. What we like HPCL, which is our preferred pick among the OMCs. We have a target price of 470. Some of the additional triggers that we see catalyst for HPCL is the demerger and potential listing of the lubricant business, commissioning of its bottom upgrade unit in fourth quarter, as well as the start of its Rajasthan refinery in the Q1 of FY26. So all that put together, we believe oil marketing companies can definitely see a strong momentum going on from here.
Okay, all right, got that. Good to have you on the show, Siddharth. Have a good Friday to the 13th, and we look forward to meeting you again soon.